Good morning, everyone. My name is Ernie Humphrey. I'm the Vice President of Educational Programs for Proformative, the online community for corporate finance, accounting, treasury, and related professionals. First, I'd like to welcome you to today's webinar, So Long as Spreadsheets and QuickBooks, a Fond Farewell. As companies grow, the increasing business complexity amplifies the risks associated with using spreadsheets, and small company-focused accounting systems increases. Errors and inefficiencies can have a meaningful impact on company efficiency and shareholder value. Continuing developments in cloud and related technologies have changed the economics of upgrading to and unlocking the power of ERP and related financial applications that empower more efficient operations and more strategic decision-making. This webinar will offer an overview of the drivers that facilitate the need to upgrade your systems to add capability and automation to critical operations at growing companies. Also on tap will be practical advice for changing the spreadsheet culture at your company and defining potential value proposition of adopting cloud ERP and other more scalable applications which can raise the IQ of your data at your company to deliver better decisions. I would like to thank NetSuite and Adaptive Planning, our sponsors today, whose commitments to thought leadership help us make this event possible, and like everything else we do at Proformative, delivered at no cost. Again, a quick note about today's agenda. First, we'll hear a presentation from our featured speaker, Tom Kelly, and then we'll move into our interactive Q&A session, where we will spend the remainder of our hour. We'd like this to be an interactive experience for you, so if you have any questions at any time, please go to the questions area in your GoToWebinar control panel and send us your questions. We can't promise to get all of them in, but we will do our best and we'll follow up afterwards on any questions we did not get to. A few logistical notes on today's webinar. A link to today's presentation is already up on the Proformative website, proformative.com, and we will also get the video posted on the site as well within 24 hours of the webinar. Those of you who would like CPE credits through NASBA will need to answer all the polling questions during the event and should have pre-registered for CPE credits. For any questions on CPE credits, please contact Chris Brower at cbrower@proformative.com. We'll have her contact information up later in the webinar, so don't worry if you didn't catch that at this time. Again, please ask questions on today's topics via the questions box in your GoToWebinar control panel anytime during the event. Again, we'll get to your questions during the Q&A panel discussion at the end of the event. Finally, you'll be asked to take a short survey regarding today's webinar. We greatly appreciate your feedback regarding our event today, as we always strive to improve the ROI we offer our event attendees for their valuable time. Quick word about Proformative. Proformative is the largest and fastest growing online community and resource for senior level corporate finance, treasury, and related professionals. Proformative connects corporate finance leaders to provide instant advice and insights on the tough financial and strategic challenges they face each and every day. Okay, let's get started. Introducing our featured speaker, Tom Kelly, Managing Director, T. Edward Incorporated. As the Managing Director of T. Edward Incorporated, Tom serves as a strategic partner and CFO/CIO for several unique companies. Portfolio companies include Cardia Health Systems and OnPoint Medical Diagnostics, organizations that were created by commercializing software intellectual property from leading healthcare institutions. Tom's insights have been gleaned from years of working with clients, striving to build on-demand environments that leverage the cloud to ensure crisp and timely execution of a company's strategy. Tom has held senior management positions with large publicly held companies like PepsiCo and Deluxe Corporation, as well as small cap and privately held equities such as EbenX and PeopleNet Communications. He is a CPA and an MBA in finance from Fordham University and a BA in accounting from North Carolina State University. With that, it is my distinct pleasure to hand the floor over to our featured speaker, Tom Kelly. Tom, please take it away.
Thank you, Ernie. Appreciate that. Just want to talk about the title page for a second for all of you out there. A fond farewell to spreadsheets and QuickBooks. Full disclosure here, yes, I have moved away from QuickBooks, but I'm part of a self-help group about spreadsheets, so if any of you need any help in that regard, please follow up after this webinar and be happy to add you to the group. But I don't know if spreadsheets will ever go away, but suffice to say there's a lot of things that you probably should be doing not on spreadsheets, but as we all, being finance professionals, I don't know if we can ever truly get away from the spreadsheets. So the question, is this your organization? So you've got plenty of information and it's all over the place, right? It's in spreadsheets, QuickBooks, reports, emails, other databases, you name it, and nothing's integrated. So we talk about consolidated reporting, and it's pretty much a manual process. It takes many hours. And it's very difficult to vouch for a high degree of accuracy when you're trying to pull all this information together. So when we think about this too, what I've experienced, and I'll talk from probably personal experience, so feel free to ask questions if your experiences differ or if you've heard things differently. It's not to say that this is the only aspect of this, but I think it's having experienced it many times over. I think I can say it with some degree of certainty that this exists in many organizations out there. You start with QuickBooks, you look at Excel, you want to add analytics, you want to get more detailed information. Then the sales organization may add ACT or Goldmine or Salesforce.com. Then you start building a homegrown website, you want to catch information off of that. And you've probably upgraded QuickBooks many times over, added more seats over and over again. And you can see it's kind of a never-ending loop, if you will, because this continues, right? As your business grows, it changes, new people come into the organization, and this is just a smattering of some of the things you may be using. There could be several more. The point being is, when you think about trying to manage this, us folks being financial professionals, we want to make sure we've got clear, precise, accurate information, and it's very, very difficult when you're spending probably over 80% of your time pulling the information together, making sure that it at least ticks and ties and foots, and then you can spend maybe 20% of your time doing what I would consider to be the value-added analysis that any organization, large or small, really needs. There was a survey done by the IMA about a year ago, and some of the common frustrations that were mentioned, integration, obviously talking about that, trying to integrate all this data, all this information, if you will, so that you can put it in a meaningful, kind of, digestible chunk, if you will. Business intelligence, right? So we talked about being able to do that analysis, the value-added analysis. Where are we? How did we get here? Where do we need to go, and how do we do that? Siloed systems. So another example is, depending upon the size of your company, each of the functions may have their own individual system. They may be using manufacturing, operations, sales, finance. You all come into the meeting, and as we would like to have everybody on one sheet of paper, most of that leadership team meeting is probably spent over arguing whose information is correct and whose isn't. But we have another, the picture that came up there, for those of you who don't know that, that's not a picture of Ernie or me. That is a picture of Pareto, and as we all know, the wonderful Pareto 80-20 scenario. If you look at this, about 80% of the response is really garnered around being able to get this information into one set chunk of clear, concise, accurate detail, and being able to generate the business intelligence out of that information so that we can be as efficient, as effective as we want to be on an individual basis and on a business basis from a holistic standpoint. The survey went on again to look at more things, where are the opportunities to improve. So to some degree, no surprise, business intelligence at 32%. But was another interesting piece at 17% was the ease of use. In other words, when you do put some type of a business intelligence tool in place, or any new tool in place, how easy is it to use? In other words, how quick is the learning curve? What's the experience of the workforce, etc. So here, and Ernie had somewhat alluded to this in the introduction, but moving to the cloud and taking advantage of the many options that are out there in the cloud today. I just want to kind of try to knock down some of the concerns, but what companies have really said is the access to this data and 150 leading technology applications. If you actually go out there and look for certain applications, whether it's a manufacturing need, a sales need, an accounting need, an ERP need, the idea of having this information available anytime, anywhere, anyhow is pretty profound. So you don't have to go in through a VPN anymore, and you don't have to rely on the IT group other than needing to make sure you have the right type of hardware or device to access the information. Another thing to think about are the data centers that safeguard this information, and also really they're the ones spending the IT resources. So a Tier 4 data center, to put this in perspective, these are people that focus 24/7, 365 days a year on making sure that you have ping, power, and pipe, meaning you can access this information, that there are no issues with it, that there are no problems within the data center itself, that the information and the hardware in the data center is safeguarded in many regards, even if there's a natural disaster, which is called redundancy. So maybe you have more than one data center in the effect that, let's say there's a major earthquake, or God forbid, should we have a major hurricane hit the East Coast, dramatic pause, If you have a data center somewhere else in the world or in the country, you're going to be able to immediately switch over to the other data center and not miss a beat. Cost-effective monthly payments versus your large capital expenditures. When you do look at the cloud, you do have the option to make payments in a monthly amount as opposed to on-premise systems, which, yes, you may be able to finance them, but for the most part, you're going to lay out a huge chunk of capital right up front. Another option, remote work from any device. So think about this. If you have a smartphone, a tablet, a laptop, a netbook, whatever it might be, you can be anywhere in the world as long as you have a high-speed internet connection and the country's not blocking certain things like China. You can pretty much access your information wherever you are. It's incredible the ability to get access to your information. And as I mentioned, the 24/7, 365, these folks are monitoring the data center. Not only that, but the applications that are running, they're monitoring the responsiveness, which the industry calls uptime. So, making sure that the application is available and is not down, let's say, during a critical time in your organization. Scalable infrastructure. It's interesting in this regard that if you go out there and you buy a lot of heavy iron servers, et cetera, and you put them in a data center, and let's say your business contracts, well, guess what? You still have that heavy iron. The equipment's not going to shrink. It's going to stay the same size. Versus with a cloud application, you can increase or decrease your user needs depending upon your business. Break the software upgrade adventure. For those of you who have gone through upgrades when you're going from one version to the other, something as simple as even Outlook and email, it's amazing what that experience is like. Well, in the case of the cloud, what these application providers do is you could turn your computer off on Friday night when you go home for the weekend, and you come in Monday morning, and you can have the latest and greatest version of the software up and running and available to you without any impact on your data or how things are working from a connection standpoint. All of this is tested, worked through so that the availability is there the very next day or Monday if you want to take the weekend off. I talked a little bit about this, but redundancy, failover protection, and the ultimate disaster recovery. So for those of you on the East Coast, particularly in the New York area where I'm from, I can imagine what it must have been like to go through, but you can leverage these applications, and if they have the redundancy such that there's not just one data center sitting in the battery in New York, you're still going to be able to have access to that information because there'll be ability to switch over to another data center in another state. The integration of the front and back office processes, being a CFO in the past and doing what I do now, I can't stress this enough that something as simple as if finance is going to put a customer on credit hold, and that salesperson is actually going to go and be making a sales call to that customer, you can get an immediate alert on your mobile device, on your laptop, whatever it is, that lets that person know that this customer has been placed on credit hold, and guess what? They can open up the information and find out why. So when they go into that customer, they can talk with them logically, professionally, and accurately about what's going on real time. And ultimately, I think for most companies, focus your efforts on your core purpose of your business, not IT maintenance. In other words, are my servers up to date? Do I have the latest and greatest connection software? That type of stuff, you're farming that out to these folks that are providing you the application. And essentially what it really comes down to is a service, right? So we want to make sure that service is optimum, but we don't want to have to worry about the fact if they have, Oracle servers or Dell servers or whatever. We just want to make sure that we're getting our information, that the application is working, and we can run our business and focus on the things that matter. So let's talk a little bit about beyond core financials. So QuickBooks is really a financial tool. There's a lot more you can do with it, obviously. However, at the end of the day, it's really a chart of accounts and a general ledger, and you can manage your transactions in it. But when you look at some of these applications that are available today, the opportunity to cash integration. So you're providing bills with faster capability and with improved accuracy because you have everything on one platform from the beginning of end, from an opportunity to cash. Procure to pay integration. So the ability to literally integrate the payment process within the system. You don't have to track it in a spreadsheet anymore. You don't have to send out a manual bill. It could be automated. You also even have the ability to strengthen the approval process. So let's just say for some reason you want to have a very detailed purchase ordering process where there might be 4 levels of approval. Well, if you're on different systems or you're running somewhat of a paper-based process, you can imagine the inefficiency that is wrought with. But if you think about most of these products having what's called workflow, meaning there's a trigger when somebody puts in a purchase order, to that purchase order getting approved online, to that then getting routed to the next person who, let's say, has to place the order, to the next person who has to receive the order. All of this stuff can be embedded within that, that workflow capability. And so the whole procure-to-pay integration process is streamlined, and I would say is even more accurate, such that don't pay for something if you don't receive what you were expecting. Travel and expense management, this is kind of interesting. I talked about mobile devices. But if you think about your smartphones or your tablets, let's say as a data capturing device. So let's say you're in a cab and you don't have your credit card to pay and you pay with cash. You can literally snap a picture of that receipt, and these programs that run on your smartphone can attach that transaction right to an expense report. And in the case of credit cards, what many of these companies will do is the credit card information will automatically be attached and be ready for you to fulfill. So even the aspect of having to deal with all this paper in the past and put together an expense report is somewhat alleviated by the technology that's available. But not being hypocritical, as I was saying earlier, it's all connected in that you have all this information within the system already. So the information is there. It's IRS compliant, etc. E-commerce to accounting, you can reduce the risk of fulfillment errors. So making sure you're fulfilling what you say you're going to send, and then only billing that customer for what you sent if you have things on back order. Services to accounting, and one view of the customer. So in kind of the analogy I was, or the example I gave of the salesperson making the sales call, that salesperson can have a 360 view of the customer, from what they may be concerned about, what is the customer ordering, you know, are they going to meet their quota, to this customer is a habitual complaining customer, they're constantly calling our support group. You'll have the ability and access to view all the notes, to even get a profit statement on a customer. Is this a profitable customer for us, or is it not a profitable customer for us? And hey, guess what? If I know that it's not, and I know why it's not, maybe there's things I can do that can turn the customer to a profitable customer. So it's pretty profound how far you can go beyond the core financials when you have everything operating on one platform, and you have ultimately access to that information in a real-time level. The other thing about these applications, ensure it will grow with your business, or I like to say ensure it will change with your business, right? Because as many businesses today, you know, we're not all growing. Some of us are holding their own, some of us are shrinking, but the ability to do certain things. So let's say from a growth standpoint, we have multiple chart of accounts, and we have to manage a continually growing consolidation. Let's say we're an acquisition spree, or we're growing the business organically. You can manage the consolidation within a system like this, such that using the same chart of accounts, or tweaking that chart of account, let's say for some of the specific things that may differ that particular business unit from another. Country-specific tax and accounting regulations. As you can imagine, these days, companies are multinational. So to be able to be operating an organization, say, in America, but then you're going to open up locations, let's say, in the UK or in other parts of Europe, many of these ERP applications have the accounting capabilities there. So if you have a need to support and report at the local level, you can address those. Automated sales tax management. This is another big one where, for those of you out there who deal with this, it's incredible about how the state and local governments can really come in and you know, really ding you for when you're not in compliance with this. But there are many offerings out there today, and some better than others, that do a great job of making sure you're capturing the right sales tax at that point of the transaction point, and having the detail, even to the point where these organizations will literally pay the taxing authority for you, so you don't even have to get in a cutting check. Another key thing for me is, you know, we talk about the business intelligence and having the insight, but drilling down from the corporate level to the subsidiaries. You can, in many cases, literally drill down to the transaction. And in many cases, some people, when you would give them their financial reports, they may say, what's this expense? You know, why? What is this? I don't know what this is. Well, you can almost have those folks now self-serve. They can actually go in and drill down, point and click, and get down to that, you know, lowest level transaction. In other words, what's driving the cost on a particular line item in their departmental budget or income statement that maybe they weren't expecting, but 9 times out of 10 they'll be able to say, oh yeah, that's right, I remember that, you know, I even approved that. So and then, as we do operate in many different countries, multi-language management. So if you have manufacturing in China and you're bringing product over here and selling it in the U.S., imagine if you actually have that partner, or even if it's a wholly owned manufacturing facility, interacting with your system in their own native language. So it's pretty impressive what you can do with some of these applications that are available out there to us today. Ongoing flexibility. So some of the things you need to consider here is it easy to integrate? Kind of alluding to what I was saying with the manufacturing arm, you can do this with your partners, your suppliers, your channels. In other words, they can have access to the system. So if you have manufacturing reps, let's say, that are out there that are independent, producers, you can actually give them access to the system, lock it down to what they need to have information, insight into, and allow them to interact with the system so they can tell you what they're thinking is going to happen, what they need to sell if you have a quota. So it allows you to, really, involve the community just beyond what's within the business, if you will. Self-serve analytics. I can't stress this one enough, but one of the things that we do in Spreadsheets, obviously, is we do a lot of finagling of the data so that we can know, what is our DSO or what that might be. A lot of these systems lend themselves very well to being able to put a dashboard, a metric, KPIs, whatever you want to call it, that are available in real time. If you run a business and you need to know when something's sold at the minute it's sold, you can have the information available at that level. Or maybe you just need to have monthly reporting or weekly reporting. Point being is you set it up and the analytics are there and they will generate themselves, and it's more of a ability for the person to be a little more proactive versus reactive, in that maybe they get a report once a month. The workflow and approvals process, I had mentioned this before, but you can literally streamline a lot of these manual processes. Everything from the approval of an expense report, or even think about this, the approval and the generation of a paper check, and I'll get into that in a little bit, but I experienced that aspect at many companies I go into. But having the ability to make that workflow happen very fast, the person, it's almost like they have to respond to something. The alert comes into their email or it comes into their dashboard, and they respond to it. It's impressive about how quick you can improve some of these, what I would consider rather inefficient processes. Customization. While I want to say a lot of these things I would argue against customization, what they do offer is the ability to do that. So if you do want to have certain things where you want to customize and change things, you can do that. And so you don't get locked into what's called the version lock. So if you have on-premise capabilities, excuse me, and you spend a lot of time customizing something, the last thing you want to do is do an upgrade, because all that customization is probably going to break, or it might cost you as much as it did to do it the first time to make it work with the newer version of whatever the particular application or software is you're working with. And then the plug-in ecosystem, reduce the risk of quickly outgrowing, meaning as your organization grows, let's say you weren't in manufacturing, you then are going to get into manufacturing, the ability to leverage what these applications offer is pretty unique and profound, in that I haven't seen a situation yet where something doesn't fit or something won't work because the organization's now decided to be a service company, or has gone from being a service company to a manufacturing company, and everything in between. And so options, options, options. So the wonderful 4-quadrant graph. Many of us have seen this, but let's look at the intersection of on-premise and accounting. So let's say you're in the on-premise world. There's an IT impact, obviously. There's a lot of support, maintenance, interaction that's required on the IT group that goes beyond what I would call just the user experience, right? So they have to make sure that the highway, whatever you want to use, the building, foundation, all that stuff's working right. I'd argue that the customer is fragmented because in many cases, a lot of the systems are not connected. So you may have billing information in one system, you may have unit information in another, and it's a lot of time and effort to get the two together. The processes, as a result of that, are somewhat fragmented as well, because you have certain people that are, aligned to certain systems. Even in the IT area, some may be supporting manufacturing, some may be supporting finance. In some cases, they support both, but in any event, there's a lot of fragmentation that exists. And there is limited self-service. So for me, what I was getting at before is you have to do a lot of legwork on your own to pull that information together, to put it in a format that makes sense, to be able to make decisions off of it, or provide it to the decision makers. Excuse me. Next thing is a lot of the on-premise applications migrated to what we call the suite, right? So now we are getting some of this integration. But in many cases, there's a substantial IT impact associated with these, and that there's usually a whole staff of IT individuals that are supporting not only the infrastructure it's running on, but the application itself to access to that application. The CapEx associated with these things are usually significant. They're pretty large. We do get the integrated business processes, though. However, I'd argue, don't kid yourselves, in some cases that integrated business processes lends itself to an even larger CapEx, has been my personal experience. But we do have somewhat of an integrated customer now, but we do have this ongoing maintenance, kind of going back to we're going to have an upgrade, and God forbid you have anything connected to this thing, it's going to break, and we have to spend significant more money on making it work. Now let's talk about the cloud, but just from an accounting standpoint. Normally in this case, we do have low IT resources, and I want to be clear about that. It doesn't mean we get rid of IT, but I almost want IT to work as like the purveyor or the CEO of the user experience. In other words, I've got the right equipment, the information is getting to me fast, et cetera, et cetera. I'm not worrying about the application. I'm not worrying about the infrastructure it's running on. I'm worrying about the security of that and access to that information. I'm worrying about the technology that I'm using and putting in the hands of the employees to leverage this application. Low CapEx, as I mentioned before, you usually have the ability to pay by month in many of these cases. But we still, without a suite, do have the potential for fragmented customer and processes. So I guess the best of everything is when you have a cloud suite. Surprise, surprise. We have the low IT resources and the low CapEx, but now you truly have this integrated business process from beginning to end, order to cash, whatever you want to call it. And as I was mentioning before with that example of the salesperson, you can have that integrated view of the customer, everything from the support side to the profit side to what they're buying to their financial ability to pay their bills. So this cartoon, actually, I found it, oh my gosh, it must be about 5 years ago now, but at first I laughed at it and I thought, this is kind of interesting. You have these two individuals and they're kind of showing their process of what happens within their business, and one remarks to the other, last year we recognized that our processes were far too complex. So we put them into the cloud and let the clouds make your life easier. So I want to be a little careful here. I don't want people to think that a miracle happens, you go to the cloud and that's it. You do have to do your work. You do have to be diligent. It's a project like any other, but it's pretty interesting. What I try to tell organizations to do is, don't always think of yourself as you're so unique that something is never going to fit your business. I find that when I go to most businesses, and as Ernie was mentioned, I have healthcare companies that come out of large healthcare institutions that you've heard of, and I have a company that uses technology to feed pigs in pig barns. And one might argue those must be very different businesses. And you know what? On the face of it, in terms of their clientele, perhaps they are. But how they truly operate, how they pay a bill, how they invoice a customer, you'd be very surprised as it's very similar and very straightforward. And both companies can adopt, one of the various applications that are out there that, believe it or not, will make their efficient process a reality and will make the company operate a lot better and give that organization insight in terms of what's happening within their operations and how can they get better in certain areas. So this might be a little tongue-in-cheek, but this came out in the New York Times about a year ago, and the comment was there are more human beings today that have access to a cell phone, the United Nations says, that have access to a clean toilet. And I hopefully won't offend anybody here, but here in the United States, we like to do both. So it's available anywhere you want, 7/24, 365. But what does this really mean? All right, think about mobility these days, and we have the tablets and the smartphones there. You can have a distributed workforce. You can have contingent workers. Great example of contingent workers is if you all have mothers out there, I'm assuming you do, think about the Mother's Day phenomena where you want to send your mom flowers. Well, companies like 1-800-Flowers and all, they have a very contingent workforce where they'll bring people in because they're just going to have a huge, huge order load that they're going to have to deal with. Well, imagine how easy it is for them now to provide these contingent workers with a smartphone or a tablet, give them instant information available. They just need to set them up with user ID and password, and they're off to the races, and they're able to carry out the business, and it's all integrated, right? So they don't have to manually input information. It's all captured. So it's pretty amazing what you can do with the capability of many of these mobile devices that are available to us today. But the self-service concept, and I don't want to belabor this, but think about the travel and expense process that may exist at your organization. Maybe you do it through Excel spreadsheets, or maybe you do a little bit of automation. But think about if you could put it to the point where at any point, any place, any time, whether I'm sitting in a cab or at my desk, I could literally probably start working on my expense report, or even submit it, if you will, anywhere in the world. And I know that it's going to get routed to the right person, and I'm going to have a paycheck, or I'm sorry, a reimbursement check, or maybe I have it in my payroll check when I receive that next check, or I return back from my trip. And then most importantly is the visibility from anywhere, having dashboards, the availability of dashboards that really are generating information that is inherent in the transaction process within the system. So you're not having to create any special type of information feed. You're just having to say, I want to put this information on a dashboard and have it available. In the self-service component of reporting and analytics, people in this day and age are becoming more and more capable of interacting with technology, and at the basic level, they may be able to get the reporting they need and not have to involve you in some of the, let's say not significant value added or deep financial analysis that's required. And another thing that's interesting is you do have the ability to personalize this information to your specific needs, be you a salesperson, an accounts payable individual, a financial analyst, you name it. You have the ability to customize it, if you will, to what really matters to you. So I'm going to go through a little bit more about the cloud here, but when we talk about leveraging the cloud, be very careful about, everybody talks about ROI and TCO, return on investment, and total cost of ownership. If you go and Google that term, you'll find hundreds, and maybe it's even thousands these days, of what's available out there to, be able to do your analysis. So my advice to you is don't recreate the wheel, just pick one. The other thing I also tell folks to do is think about the efficiency gains you're going to get. And I want to be careful here because hard dollars are important, right? If we're going to be implementing something and spending money, we want to make sure we're going to be saving money. Well, where are we going to save that money? But also don't kid yourselves about the efficiency gains. Think about that salesperson who's at that customer now, and they know they've been placed on credit hold. What if that person actually can then talk to the customer and they walk out the door with a check? Think about the time value of money. Think about the countless number of calls now that the receivable department doesn't have to go through. Think about the efficiency gains across this process. Think about the improvement of data, the accessibility of it, and more importantly now the accountability. We're not arguing about what's right. Also, another thing to think about in this day and age is we always seem to be doing a lot more with a lot less. Well, if you can start avoiding having to do certain things, you now maybe can turn that headcount and realign it to something that might be considered more value added to your customer, to driving your top and bottom line, whatever it might be. Think about the pain point relief, and I'm going to talk about actually the check process here in a little bit. You'll get an idea of what I mean by pain point. And think about effectively and efficiently running your business now. You're getting information, it's real time, it's actionable, it's accurate. It allows you, in my estimation, as an organization to focus on what matters most. So let me bust a few myths about the cloud. I've been talking a lot about it, but these are things that I've run into over time. The uptime myth. So I mentioned this before. You want to make sure that application is available, right? And two things here. Number one, it's great because the whole world's watching. What do I mean by that? Well, I'm sure you've seen front page of the Wall Street Journal when Salesforce.com has gone down or Google has gone down. You're going to know about it, and there's no way that they can hide it. But I want you to think about the uptime and what I mean by uptime. So on the left-hand side there, the first column is availability. And they talk about availability in terms of nines, percentages. So 99.5%. What that means is they're guaranteeing that their system will be up and running with no surprises except for 43.92 hours, which is 1.83 days. And most people say, well, I can't. What happens? What if I'm out a day or 1.8 days? I can't have that happen. The reality, folks, what happens here is that 1.83 days is usually spread over 365 days. So there may be a minute outage, a 5-minute outage. Sometimes there's an hour outage. But I would argue that in most cases, the outage is not going to be as significant as you may be led to believe. And I would even ask, if you do run things internally, ask your own internal group, what's their uptime for certain applications. I'd be pressed to find one that can be better than some of these world-class cloud companies that are out there today. The data security myth, and this is a big thing. Yeah, I mean, it could be a problem. You know, hackers try to get in, but more times than not, where I see the data security break down are where we get involved, the human aspect of it. My healthcare companies have a thing called HIPAA, the Health Insurance Portability Act, being able to secure, you know, confidential or patient information, everything from their Social Security to their ailment. I've seen situations where people are sending things in emails, where they have yellow Post-it stickers on their computer. Those are the HIPAA violations. As far as the data that's actually within the system, normally it's encrypted, it's protected, it's secure more so than what email may be. But security, when you think about it, it's a cloud computing must. In other words, if there's a company out there that does not have good security and is getting front page news about they're not protecting the information well, I don't know if you're going to have the option to choose them from the list of, you know, top cloud providers, because if they don't and they're not able to secure the information to what's required within the, you know, specific industry requirements, etc., well, then they're not going to be around very long. And so a key component of the business of the cloud provider's business model is on security, and most of these established providers, they'll have probably over 20% or more these days of their workforce just focusing on it all the time. I don't know if we as individuals or companies have the ability to, you know, put several heads on security as these cloud providers do day in and day out. The other thing that I've experienced is the difficult learning curve. In other words, you know, it's going to be very hard to learn. What's most interesting to me is most of us these days have ordered something on Amazon. A lot of us have Gmail. And what you'll start to find is the user interface with many of these offerings is very, I don't want to say similar, but it's familiar. And it's familiar in a sense that you can get up to speed and work on it a lot quicker than you may think. And most of the implementations and works that I've done in this area, I usually find that the workforce, there is a little bit of a change event. Obviously, we're making a big change, but that learning curve is much quicker. I find that the organization usually gets back on track and exceeds, you know, where they were initially before we went through the new offering, and they get up to speed a lot faster. And it's a constant learning thing. People will, you know, they may have a question and they have a certain skill set and they feel comfortable with the system. They may dig deeper. They may write their own report. It's pretty interesting what I find in organizations and what they're capable of doing themselves. Next thing is there's a scalability myth. And what I usually tell people, if they want to think about scalability, I say think about the single home versus the apartment complex, right? Well, in a single home, you've got, you know, one set of plumbing that the single home is using, one set of electricity. Well, in the apartment situation, you've got a plumbing that everybody is using, technically, that electricity that's coming through, you know, one pipe. So it's a multi-tenant shared concept, if you will. And from a scalability standpoint, the past of running into, well, you know, we have 3,000 employees. What's interesting to me is when you look at companies like NetSuite or Google or Salesforce, I don't know if there's any company in the world that is anywhere near the size of the number of users that they have running on their servers. So to say that it's not scalable, I think is a complete myth these days, and if it's brought up, it's somewhat laughable at this point relative to, again, what some of these top-notch cloud providers offer to businesses today. I alluded to this in the very beginning, the real cost myth. My advice to you is, this is just a couple of, you know, screenshots I took from when I Googled, you know, ROI, total cost of ownership for cloud computing. Believe me, you'll find one that's going to fit your business need. You don't have to recreate this yourself. It's already available there for you. You just need to plug in the numbers. So this is a great graphic I like to show. I call it the application's hairball. What I mean by that is if you look at what's happening here as this builds, and I don't know if it's taking a while to build, but this is still and was a client of mine that came to me with all of these issues, all of these applications running, you know, individually, and we're trying to pull everything together. in Excel hell, if you will. Not an easy job. Believe me, the people that sit in the middle there and are able to do this should be patted on the back. But it's almost a recipe for not success. In other words, you're almost doomed to fail because if these things change, staying on top of the new data flow, it's not really a situation by which you're going to be successful in ensuring that you're up to date real time. So something to think about bringing all that stuff together. So strategically invest in technology. The old way, put a lot up front. Get the disk, pay $1 million, spend 4 times more implementing it, annual maintenance, I don't know, holding hostage and upgrades, etc. The new way, pay as you go for what you need. So there's no cost for managing the application. The vendor bears that now. They don't just bear the cost, they bear also your satisfaction, because believe me, if you're not happy with it, you can move to something else. And that's one thing I will tell you. I have found it much easier to move from a cloud option to another cloud option than it is to even go from on-premise to on-premise. So something to think about. You're going to pay a fraction of the perpetual license, and you're going to do it in a subscription format. So month by month, quarter by quarter, whatever it is you work out with your specific vendor. And frankly, as I was just saying, you're going to renew only if you're satisfied. If that business application isn't working the way you want it, if it's not fulfilling your needs, if the service is not there, you can move to something else. So they have to make sure they're doing their job day in and day out. So finance processes with a suite, I would say focus on integrating that management cycle. So you have your actuals in ERP and you have your planning process. There's plenty of applications out there today that actually sync these two together and do a great job of providing you information, not only from a real-time standpoint, but even if you want to do projections on it, you're projecting on real-time information. And then the ability to connect the two so you're not constantly being at odds with, let's say, what's in your forecast versus what's in your operating plan and what all the employees are seeing or those that need to react to that information on a day-in and day-out basis. So the cloud enables finance to do quite a few things. You can scale a distributed finance organization. I tell people think of NASA, and think of NASA in a sense that they could tell the astronauts everything that's going on with the spaceship. They could tell the astronauts everything that's going on outside the spaceship. They can also tell the astronauts everything that's going on with themselves because they monitor them. SAS 70 Type 2 compliancy, when you adopt some of these applications, most of them have SAS 70 Type 2 compliant controls. It's already there. You don't have to create a process on your own. It's been audited. They've got everything. Now for my fun thing, automating end-to-end business processes. So checks. I'm just going to bear with me here, but when most companies, want to generate a check, and I'm probably talking about more of the small to mid-sized business segment, this is usually how it goes, right? You get a stack of checks, or you get a bunch of payments. You figure out what you're going to run. So you get those things together. You have the person then go and put together all the, voucher packages, staple the information, not the check voucher yet, but staple the payment voucher, the package for what's been paid, all the information. You take those, 40 items, which are usually about 1 foot to 2 feet high. You bring them into, whoever's got the approval process, the CFO, the controller, whatever. You dump them on her desk. She then takes them and looks through them and says, yep, these are great. Go ahead, make the check run. The person comes in, takes all the voucher packages back, goes in and makes the check run, generates the checks, brings the check run in, and wants the CFO now to sign them. She's starting to sign them but says, oh, I don't remember this one. Can you go and pull that voucher again? Or it's usually not just one, it's several. That person gets back up from her desk, pulls all the vouchers, goes in, drops them back on the CFO's desk. Oh, yeah, I remember these. Signs the checks, takes the checks, brings them back to the person who's sitting usually at the front desk, says, okay, here you go. That person then separates the check, takes the check stub, staples it to the voucher package, goes through all that process, then takes the checks, puts them in the envelopes, licks the envelopes, closes the envelopes, puts the postage on them, then mails them out the door. In the case of many of these applications, what you can do is you can automate that entire process and make it all digital. There's no more check vouchers to pull. If I'm the CFO and I'm online, I'm looking at something, and I need to approve a payment, I approve that payment, I click a checkbox, and some of these companies literally, once I've clicked that checkbox, they will then go and that alerts a partner that'll generate a check that'll look very professional if you're a 15-employee company or 150 or 1,000 employee company. That'll go. You don't have to deal with any more of the vouchers. You don't have to deal with any more of the check runs. You don't even have to deal with getting checks anymore. It's all automated. So this is real, and I'm not trying to indicate something to all of you that you can't do. This has been done. I've done it many times. Other companies do it. So point being is you can do it whether you're a large enterprise or you're a small office, home office. We've talked about the more tightly integrated analytics. It's coming from the system itself. It's coming out of the process. You don't have to create any data capture methodologies. Automatic upgrades, we've talked about that. You eliminate the wasted maintenance cost, if you will. You pay maintenance, never upgrade it. Well, with a cloud application, they're upgrading it for you with the latest and greatest stuff at least twice a year, sometimes more than that. And most importantly, I think you can now reallocate that IT budget from a maintenance organization to the controller of the user experience. Making sure all of our employees are happy with the devices they have, with the access to the information they need, so they can be successful in their day in and day out accountabilities. So moving away from spreadsheets and QuickBooks to the cloud mitigates some of your risks. I'd argue your data is much more secure. There's absolutely one version of the truth. There's no more formula errors or link errors, and you're in compliance in many respects, whether it's SAS 70 Type 2 compliance or whether it's data security. And most important, you can control the access to that data, and meaning everybody shouldn't have information to maybe what overall sales are. So the ability to role-base the aspect of what a person is going to do to integrate with these systems or interact with these systems is not going to be based on something other than what their key accountabilities are. And sometimes I say the person in charge of accounts payable, think of yourself as the CEO of accounts payable. Everything you need to know about accounts payable, you can turn on the system and have that come up and look at you in the face every morning if you want. You know exactly what you'll have to do. You'll know exactly what your problems are. And you can be very efficient and very effective in your role. The reduced cost, obviously we've talked about that. And most importantly, and this is what I profess to organizations, think about the improved efficiency. So think about that check run process I just went through. Imagine if you could take it from a paper-based process to a completely digital process. Some general tips for success. You want to assign a cross-functional team for the implementation. I'm sure you never heard that before. I mean, that's important, I think, no matter what you're doing, but especially if you're looking at one of these options that is going to put your entire business on a single platform. Assign the business goals and make sure you can measure those goals. Broaden ERP usage across business and departments, meaning no longer does it have to be a financially driven exercise or a financial user exercise. All people in the organization can use it. Ensure you get clear visibility into your ERP data. So now we've got everything on one platform. We're not pulling it in from several disparate systems. And plan for a distributed mobile organization. In other words, you now as the owner of the user experience in IT, make sure you're going to set up a situation where everybody's going to be happy and get the level of access and the equipment they need to access that data where and when they want and how they want. And with that, I will turn it back to Ernie and be happy to answer any questions that anyone has.
Thank you very much, Tom, for that great content. We will now be launching our polling questions. We'd love to have everyone in the audience answer the polling questions. We take that benchmarking data and share that within the community. Please note, those of you in today's audience who are after CPE credit today, you'll have to answer all of the polling questions. And now what I'm going to do is I'm going to go ahead and start on the Q&A as the polling questions are up, so we can make the best use of our opportunity to speak with Tom, who is a renowned expert in cloud-related technologies. So first question for Tom is around the concerns. So is there anything that is lost when you go from Excel? So it all sounds great. What are some things that people might lose in making the transition, if anything?
So making the transition, losing from Excel, I think you need to take a step back and understand what you're looking at, right? So in some cases, before, where let's say I was mentioning, we want to have a view of profitability by customer. Normally, in many cases, what you have to do there is you're going to pull information even out of the same system, where you're going to pull in the revenues, pull in the costs associated with it. What you can do with a lot of these systems, though, is you don't necessarily have to leverage Excel to do that. You can actually have a report that's going to generate it for you, and it'll be more factual, I think, and accurate in terms of the fact that it's pulling consistent standard information that is generating a profit and loss statement. Beyond that, I don't think you really lose anything with Excel, but I think now you can use Excel in a more laser-guided approach, in that maybe you really want to understand the product mix of a particular customer, because you think that's maybe what's driving the non-profitability, or in some cases maybe that's what makes one customer more profitable versus another. So I don't want to ever say that you totally want to abandon spreadsheets, but I think now you can use spreadsheets, at least in my estimation, what they were probably originally intended to be used for. Things like doing some very valued, deep level financial analysis as opposed to just generating P&L for a customer.
Okay, great. Someone's asking questions along what type of support is there in general for these cloud applications when someone's trying to bring a foreign subsidiary online?
Well, I mean, for those, I would say the more established vendors, they probably have people on staff that specialize in that. One of the things that they also do a very good job of is they try to build partner communities, around the world. So not just here in the U.S., but let's say in China or Malaysia, for that matter. I had an experience setting up something in Malaysia, and there was a local partner who spoke the local language, who understood the system, was a partner of the system, and we were able to leverage those individuals as well. So there's a few ways you can do it. I've even been in situations where we literally had an interpreter to be able to help us, but didn't really have any experience with the system itself. So there's many different ways you can go about it, but I would probably say start with the application vendor, and if they don't have it, then I would probably ask if they have any partners where you're going to where the language is different than what you currently speak.
Okay, great. You mentioned this in your presentation, but someone's asking a question around this. Again, put a little point on it for us. So someone's saying, after you outsource IT, in a sense, how difficult is it to change service providers in the cloud? Let's say you have a cloud, someone that's doing FP&A, and you're not happy with them. How difficult is that transition process in general?
So here, the difference between a cloud application or an on-premise application is this: you have to write the application and the protocol within the application so that it can leverage the internet. When you do that, there are certain things that have to somewhat be similar, one application to the next. So let's take, for instance, let's say your customer file, your customer data, right? Something as simple as customer name, email, phone number, that type of information. The ability to actually export that and upload it into a new cloud application. Let's say you're going from a Salesforce automation tool from one to the other. It's really not that hard because maybe there's certain things you need to do because their upload schematic is different than the original one. So you need to maybe move columns around. You maybe need to call the column something different. But that information, customer name, phone number, etc., is going to be very consistent across applications. Even when you get down to the financial side of things, and again, this is not indicative of, I would say, a on-premise or cloud, but anytime you're doing implementation or moving from one application to the next, the more history you want to bring over, obviously the more involved it's going to be. But you do have the ability now, because you've got this information, what I would consider a much cleaner setup, if you will. It'll allow you to bring that information over and import it, literally, if you want, CSV file import, believe it or not, at that level, if you so choose to. So to me, and this is my personal experience, I've had situations where a certain application isn't working right, or the customer's just not happy with the application itself or the support they're getting. They want to move to something else. Done that several times, and I'm again, this is personal experience. It has gone much easier going from cloud to cloud than it ever was going from on-premise to on-premise.
Okay, great. There's a question around kind of what is included in the cloud ERP. Say you're going to a cloud ERP package, so the main driver may be accounting. So I think the question is around, is there also, in general, some base functionality around production planning and control and inventory and other things above and beyond accounting, or are those things in general like a bolt-on cloud application?
Most of the ones that I've seen, and there's a few of them out there, when we talk about accounting, it will have the general need for manufacturing information, item master, material master, whatever you call it. So you have the ability to do that. If you want to do things that are probably more specific to, we'll talk about manufacturing, demand planning. If you have significant bills of materials, usually in those cases you're probably going to have to look at an offering that's targeted on those areas. But many of these cloud providers, they'll have very close relationships with some of these vendors, and in many cases they're integrated into the system already. So the ability to interact and send that information back and forth is already built into the system. And in some cases they even determine they're wrappered within the application. So you as the user may think you're using the MRP system, or you're using the ERP system when in fact you're actually interacting with the MRP company's offering, but it's wrapped within the ERP system offering, if that makes sense.
Okay, great. Someone's asking, I know we talked about the economics of moving to the cloud, but for a small business, is there any insights you can give us, as to what that multiple might look like for, say, for example, going from QuickBooks to a cloud ERP application?
So if you want to do accounting, I mean, there's some out there that just do accounting, so you can look at something like that if that makes sense to you, and they're very simple packages, almost very much like a QuickBooks. QuickBooks even has a cloud-based offering, but QuickBooks is a great product, don't get me wrong, but usually what I find with that is some of the other competitors out there that may be targeting QuickBooks, their cloud offering is much better in terms of what you get from the base price than what the initial QuickBooks offering is. However, QuickBooks offers more. As you go upstream, then there's companies out there, Intact, NetSuite, Plexus, Workday, that have much more involved ERP capabilities. I think if you're looking at those, you're probably looking at somewhere in the range of $5,000 to $10,000. Year one cost including implementation. After that, it could be anywhere between 40 and 60% of what your ongoing cost might be for what I would consider a small company, 5 to 20 employees, let's say.
Okay, great. I think I know the answer, but I'll let you answer. As far as accounting issues and related issues such as VAT and all those complexities, are those in general things that are automatically handled by the system, the cloud system?
So DAT, we're talking about taxes?
Yes, yeah.
Yep. So like in these cases, some of the systems do a very good job of having, I'll talk about sales tax information. They do a very good job of, by zip code, you can have sales tax information, but there are other partners out there that work with these cloud vendors that will allow you to go down to even the street address, because there's been many cases where the actual street address is in a different, because of gerrymandering, or I think that's what they call it. They're actually in a different sales tax zone. Even though, literally you can look at the map and the one house has a box drawn around it on the same block. I kid you not. You can go to that level of detail and leverage what the partner may have and have that information flow into the system so that it's there from a reportable standpoint. But then on the compliance side, that partner is going to probably keep you in much better sync if you do have those issues to address within your whatever your business may do. So it's kind of a it's an individual business call, but the opportunity to use those things exists.
Okay, thanks, Tom. We got to take a couple more questions and then a final question. These are around some of the functionality that's out there, and this is common as we have this raised oftentimes, Tom, because it's a key concern, obviously. I guess I'll ask them. Part A is in regards to payroll systems. So how do these applications integrate with payroll systems? So that'll be Part A.
Part A, so two things. Some of these ERP systems they offer payroll within it, but some of them don't. Let's say you use ADP. And what I usually tell companies is, how detailed do you want to be? ADP has a wonderful, they call it the general ledger interface, which is a report that sits out there. And you have the option to bring in as much detail or as little detail as you want. So if you just want to bring in, salaries, commissions, payroll taxes in total for a department, you can do that. If you want to bring in down to the employee level, you can do that as well. So when you get to that point, I have, the payroll systems, I wouldn't let that preclude you from going to the cloud, because many of these payroll systems have the report output that allows you to import it into the system, and you can do it on an automated basis, or like I was saying before, you can create a CSV file and just manually import it every time you run a payroll. So that's partly up to the the company's needs and what direction they want to go in.
Okay, great. Another kind of functionality question is around the maturity or applications available of tracking non-exempt work time and tracking employee hours and so forth.
Mm-hmm. Again, there are plenty of tools out there for it. Even at a minimum, I think you can set up forms within some of these ERP systems which require people to enter their time there. There's time tracking offerings, whatever payroll, ADP, paychecks, you name it. There's even third-party suppliers that just have very specific tools. Something that could capture a handprint, or a fingerprint, if you want to go to that level. All of those can be integrated into the system so that the data would flow real-time into the system, so that you have it there either to run the payroll or input into the payroll or whatever the need is. So the capability is there, and there's several offerings. So I couldn't opine as to which one's the best. I'd have to say maybe ask a question on Proformative or do a little searching on your own.
Oh, thank you very much, Tom. We're going to go ahead and close the Q&A session to be mindful of everyone's time today. I would like to thank Tom for his time and insight. For those of you in the audience, if you'd like to connect you directly with Tom, please indicate that on the survey. We'll ask you to take immediately at the conclusion of the webinar. Tom is clearly a leader in his field and an excellent source of information on today's topics. Thanks again today to today's sponsors, NetSuite and Adaptive Planning, who made this event possible today and allow us to offer it for free to all of our attendees. Again, if you have any CPE questions, please email those to Chris Brower at Proformative.com. That's CBRAUER at Proformative.com. Again, we'll ask you to take a short survey once the webinar is over. We appreciate your consideration in taking this, as we always strive to maximize the ROI to our event and our attendees. And finally, thank you very much to the audience for your valuable time, and we hope to see you on Proformative.com and future events. Have a great day, everyone. Thank you.